It wasn't a currency manipulation scheme. It wasn't even a technological accident. The arithmetic is merciless. A rising challenger quietly corners the supply chain. The challenger accumulates physical inventory. The result is a massive geopolitical arbitrage. History shows us exactly what happens when an empire hollows out its industrial base, while a rival secures the inputs of the future. Under Philip II, Spain was the dominant global power. They controlled the vast silver mines of Potosi in present-day Bolivia. The monetary shortcut was to flood the market with raw currency. Land prices soared. Just like the Spanish Empire, the British Empire walked the same path 3 centuries later. By 1914, London was the financial capital of the world. The sterling was the global reserve standard. The inflation of the 1970s was the mathematical consequence of decades of deficit spending. Housing became a speculative vehicle rather than shelter. A dock worker in Liverpool in 1976 watched the industrial machinery rust. While the City of London played with financial paper, the empire didn't vanish overnight. Before 1914, Germany was an industrial titan. The monetary shortcut was the printing press. In 1923, the currency collapsed completely. The flight into hard assets was instantaneous. Society fractured. The middle class was wiped out in a matter of months. The pattern repeats in 7 distinct stages. Stage 1 is industrial dominance, where the hegemon produces more than it consumes. Stage 2 is financialization, where the focus shifts from making things to financing things. Stage 3 is the offshoring of capacity, where dirty industrial jobs are sent to rising rivals to increase profit margins. Stage 4 is resource dependency, where the hegemon loses control of the physical supply chains required to maintain its lifestyle. Stage 5 is the supply shock, where the rival restricts access to critical inputs. Stage 6 is panic accumulation, where the market realizes paper contracts cannot be eaten or burned for energy. Stage 7 is the geopolitical transfer, where wealth flows rapidly from the financial center to the resource controller, just like Weimar. Germany. The United States today finds itself in the dangerous friction between Stage 4 and Stage 5. Current data suggests that while Western markets have treated silver as a mere paper asset, to be traded on the COMEX, China has treated it as a strategic industrial metal. The incentive for Beijing has been clear for 2 decades. They have systematically built the refining capacity and the solar manufacturing base that requires massive amounts of physical silver. Estimates range, but China now controls a vast majority of the processing capacity for the green energy transition. The risk is that the price discovery mechanism on Western exchanges, which is based on leverage and paper contracts, has detached from the physical reality of supply deficits. Some economic historians note that commodity cycles are self-correcting, and that high prices will eventually spur new mining supply. While theoretically true, this view ignores the time lag and at geology. Building a new mine takes a decade, refining capacity takes years to permit and construct. Under these constraints, the rational move for the incumbent power is to suppress the price to keep inflation low, while the rational move for the challenger is to buy every physical ounce available at the suppressed price. This creates a vacuum where the physical inventory moves east while the paper liability stays west. The end game approaches in one of three ways. The first is a controlled decline. This looks like the British experience after 1945. The currency loses purchasing power steadily, living standards erode, and the nation accepts a secondary role. On the world stage, the 1967 devaluation of the pound is the historical anchor here. The second is a chaotic collapse. This resembles the Soviet Union in 1991. Supply chains break entirely. The currency is rejected by international trade partners. The internal economy halts as hyperinflation makes calculation impossible. The third is a reset and restructure. This is the path of Bretton Woods in 1944. The system is rebooted with a new anchor, usually linking the currency back to a tangible asset or a basket of commodities to restore trust. This requires a massive devaluation of the currency against hard assets. The only variable is timing and pain. Subscribe to this channel to understand the mechanics of this transition. Focus on education, build resilience in your personal supply chain, and pay attention to the flow of physical materials, not just the movement of stock indices.